Hey everyone, we got some big news for SoundHound AI stock investors. Of course, the company's going to report earnings any day now, but before that, I wanted to dive into these results here, what the CFO discussed about the company that I think SoundHound AI stock investors need to know about. So let's jump right in. Let's take a look at these latest developments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so SoundHound AI CFO Nitesh Sharan, I hope I said that name right, said that in autos, which represents the majority of this pillar, they increased their new units by 68%, and their active cloud users increased by close to 45% compared to the prior year. Those are significant improvements year over year in an industry that's been troubled, right? The automotive market has been troubled in the last year, especially the newer EV market, price cuts, price competition, wars, declining profitability, all of that. And despite those factors in the industry, SoundHound AI is gaining traction. That's impressive. So they ended with a $342 million cumulative bookings backlog, and that was up 13% year over year. Now, this cumulative booking backlog is critical for a company like SoundHound AI because it determines what revenue will be like over the next 12, 24, 36 months. These backlogs turn into revenue as SoundHound AI delivers the service that they have contracted for. Typically, companies like SoundHound AI, well, let me give you a magazine example. If you sign up for a magazine subscription, let's say you sign up for an annual magazine subscription, let's say you pay $120 for that magazine subscription, and you're going to get 12 issues throughout the year, and you pay for it all up front in January. The magazine company doesn't recognize that $120 as revenue. It only recognizes $10 as revenue. The rest of it will recognize as revenue as the magazine company delivers your subscription. So they can only recognize the revenue when they deliver that service. Similar here with SoundHound AI. They have this backlog that will turn into revenue when they deliver the service. So this is indicative of what the revenue is going to look like over the next 6, 12, 18, and 24 months. And you want to see this number continue increasing, and you want to see this number hopefully increase at a rate that's faster than the growth rate in revenue. The company noting that they have certain contracts that span up to 10 years, and there's an average contract length of 6.5 years. Interestingly, their partners are signing long-term contracts with SoundHound AI. That's a vote of confidence, signaling that they like what SoundHound AI has to offer, and they're signing these long-term agreements because they want to lock in that service. And it's likely that they find the rates, the prices very attractive. Otherwise, they wouldn't be locking in these long-term agreements with SoundHound AI. Moving on, the CFO says with solely the brands they have signed to date at scale and full deployment across these customer groups, they would now have over 4,500 locations and well over 25 million in annual recurring revenue. This is referring to restaurants with the drive-through locations. That's big, right? 4,500 locations with 25 million in annual recurring revenue. And that's just one customer segment, right? We just talked about automotive, and this is restaurants. So you're starting to see the power of SoundHound AI, and it's branching into these different customer segments and growing in those areas. Restaurants and automotive are just two of the categories that it's branching into, and there's a lot more for SoundHound AI to get into. In the third quarter, revenue accelerated by 52% sequentially to 13.3 million and 19% year over year. Interestingly, the quarter over quarter growth was much faster than the year over year growth, signaling that it's just getting underway with this kind of exponential growth. You saw this kind of growth with NVIDIA, I want to say 9 months ago, 15 months ago, where it really started to gain the benefits of the rising effectiveness of AI. Could this be the start of that similar trend for SoundHound AI? It could be, although it's a little too early to tell. It's a little too early to tell. And so it's a start. It's a great start, but we want to see more information from SoundHound AI to really drill home that point that they're experiencing this kind of exponential growth, similar to the kind of growth rates that NVIDIA is experiencing from the rising effectiveness of AI. So this expansion was mainly driven by auto units as well as continued unit price increases. So not only are they getting into more units, but they're also increasing the price per unit. That's good to see. That means they're not growing because they're offering better prices or lower prices, but they're growing and they're raising prices. That signals demand is strong for SoundHound AI's products and services, and that more good news is likely to come on that front. The gross margin was 73%. That's a really good gross profit margin. And they did a good job. You see, total operating expenses improved by nearly 1/3 year over year, largely driven by the corporate restructuring program they announced in the first quarter this year, which affected all line items. So they did a good job getting costs under control, lowering costs, which is critical for SoundHound AI because they are losing a great deal of money on the bottom line, and that is important for them to get it under control. I have here their operating profit margin over the last 12 months was negative 211%. Cash flow from operations was negative 196%. So it was critically needed, this program, and you're starting to see the benefits of that from their cost restructuring. Sales and marketing expenses were $4.5 million in the third quarter. That was a decrease in 33% year over year. I always say that it's impressive when a company can grow their revenue really quickly, like the way that SoundHound AI did in its most latest quarter, right? Revenue increasing 52% sequentially and 93% year over year, despite the fact that they decreased sales and marketing expense by 33% year over year. It's always easy to grow your sales if you spend more money on sales and marketing and advertising, right? But imagine growing sales while decreasing your spending on sales and marketing and advertising. That demonstrates there's organic demand for your products, that you're not just getting sales by advertising, marketing, promotions, incentives. That demonstrates pure organic demand for your product. I'd really like to see that, and I'm seeing that here with SoundHound AI. General and admin expenses, one of my worst favorite spending categories, were $6.9 million in the third quarter, a decrease of 28% year over year. Good. The lower these expenses, the better for me. These are corporate overhead. These are salaries for management, the CEO, the CFO, the corporate headquarters, offices, travel expense, spending on the annual office Christmas party, things like that I tend to find a lot of waste in. I like to see this number decrease, and we saw that with SoundHound AI. And lastly, their operating loss was $14.5 million, which reflects an improvement of 46% year over year. 46% improvement year over year when their revenue only increased by 19%. Solid improvement, to be sure. Now, there's a lot more work to be done for SoundHound AI, but it's a great progress and it's a great start, and they're on their way to capitalizing on this rising effectiveness of AI. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.